Hey, you are listening to StockSmart on the iBet Networks with Jeffrey Camus, and we have a special guest, options trader Joe Waterman. And Joe, you're an options expert. You had years of experience trading on the floor, and you were just talking, off the show about how it's all a change for you, and this is a whole new environment.
Right. Yeah. No. Hello, everyone. Yeah. It's kind of humbling just to see how much everything's changing in the industry, right? And then I've been noticing that I have a lot of skills that are transferable, but it's just how to master it all. And there's so much to do, and where to start and where to begin. So,
well, let's set this up a little bit. So you had experience trading on the floor in Chicago, and then you were retired. You have family, kind of raising a family, doing some cooking. I know we talked about that last week, but now you're in this room where you meet with 2,000 or 3,000 traders. I actually checked it out. I didn't have time to sign up because I just got back. Yep. I hope you had a good Thanksgiving, by the way.
Yeah, I had a great one. I hope you did too.
Did you end up cooking at all?
You know what? I actually lied to the listeners.
Oh, no.
I found out later that my wife was ordering dinner. I knew that she was ordering, but I thought I had to supplement some of it. But It turned out that she ordered enough, so I didn't have to do any of the cooking. So I took
no sous vide turkey.
No, but I do still have a turkey breast that I'm going to do.
Well, that's fantastic. That's good. I've never sous vide a turkey. There's some meats I haven't because I'd like the roasting experience. And I tried one time to sous vide a prime rib, and I didn't like the way it turned out because I think it needs the time and the roast flavor, and you can't get that searing, just for a little period of time.
Well, you got to pre-sear and post-sear.
Oh, see, new techniques. I got to go in your sous vide trading room.
Yeah, right. There you go.
So let's talk about some. So I'll tell you what, I think market's been really interesting to me. I was on, I'm sure a lot of people were on the wrong side of some of these minor corrections. But volatility for options is always kind of interesting. And tell me what you've been seeing. So I want to talk about one thing. We talk about, and so big thing, we talked about transitory inflation. Now, it was kind of funny. I thought, he's getting kind of, beaten up. Powell is a little bit. By Congress a little bit. They're asking him hey, why were you so late on inflation? And if listeners want to go back, I did a show in February of this last year, and I said, it's a big dollar sign, and it says inflation is real and it's coming. And I knew because I actually was one of these losers who sat and read the CPI reports. And I knew, and I told listeners at that time to get into DBC, which is the commodities index, which is a commodities ETF, I should say, which is a fantastic way in your own portfolios. If you're concerned about inflation, get into this. This thing was up 40% this year. It had a minor correction the last couple of weeks where it was up at 55, 60%, but it's traded down about 15, 20%. But now we're having the Fed recognize inflation, and it's something like 5%. But this DBC, this commodities index ETF, really was a good way. And I will tell you, full disclosure, I own some. I own it in my clients' portfolios, and I think it is a great hedge if you fear inflation going up. And Powell did say in his congressional testimony that they're retiring the word, transitory.
Yeah, right.
Well, one of the things, do you ever, back in the days when you were trading on the market, did you ever read the CPI, or did you just know the numbers when they would come out? They have that guy, Rick, who's on CNBC.
Santelli.
Yeah, Santelli. You probably knew him, right, Santelli?
Oh, yeah, he was on the floor. You could definitely, I didn't know him personally, but if I wanted to, you could definitely meet him or talk to him.
Yeah, he's a true Chicago guy, but I don't know why he wears cowboy boots. That's the one thing I can't figure out.
Yeah, who knows?
But did you ever dig into?
He's an interesting guy.
Did you ever dig into this? Yeah.
Yeah. So basically, I think instead of just talking about the one number, definitely events were scheduled around numbers, right? So
and maybe I should introduce. And I'm sorry, I didn't mean to cut you off, but let me introduce it. The CPI is the Consumer Price Index. And it is essentially something taken monthly via survey on different items that we purchase and or services. And so go into what you know about it, Joe.
Yeah, well, along those lines, they can take things in and out of the basket, right? It's a basket of goods, and then they compare that year over year to the prices. So if unemployment would be probably the number that was largest, the biggest number for us during my years down there. And so if we were talking about trading bonds and talking about the unemployment number versus the CPI, right? Then we would like you could look at the straddle prices to kind of see what the implied move is or how volatile this number is, and then you could compare that when it comes out to the event. I don't think I did the best job on that, but like, so basically there's an event that's going to happen and there's an expectation, like a point spread, and then when the number actually comes out, if it disagrees, if it's way off what's expected, then that's when the move is going to happen.
Right.
And the straddle is one way, like a big expensive straddle means high volatility, right?
Mm-hmm.
And then if the number comes in line, then that straddle would probably be better to sell it because it was an expensive straddle and everything happened that was expected, right?
Right. And on the CPI then, when you would look at it, did you know one of the things is the basket can change, they can add and place different things in it, and they compare it to a year-over-year time period. So there could be lags in that. And I think we use it as a leading indicator, but it's kind of a lagging indicator, right? Of course, because it's showing price data that's already happened.
Yep. Yeah. So it's like, and then if it, like, I know a lot of like things they'll throw out, like, you know, gas prices or even some food prices and stuff like that. So then people even question if it is a true reflection or an accurate reflection of inflation.
Right. And the one thing is, and so the question came up today, and you were talking about employment. And that to me is the really interesting question, because I have an argument with a friend of mine. Now, my friend employs about 100 people. He has a plumbing company. He used to be a plumber, but he grew himself into a really successful business. And he always argues that that salaries are in line with inflation this year. Now, he's seeing a really small bubble because Marin is very expensive. Where we live is Northern California is probably one of the more expensive places to live in the country. And I think that his data is probably not correct. So I had the argument. I said, well, what about fixed income? So first off, if you're on fixed income and you're in a fixed income portfolio where you're only making 2 to 3% because it's very conservative against 5% inflation, you're down 3% right off the bat. But his argument would be that wages have gone up, but I don't think wages have gone up. Do you think teachers' salaries, Joe, have gone up 5% in the last year?
Dude, yeah, I don't think wages have really tracked that for a long period of time. I mean, like when you look at college and what you pay for college versus the wage that you get when you leave college, like college has gone up 3 or 4 times and the starting salaries still are kind of the same.
That's actually that's actually awesome. So they're kind of becoming, the separation is becoming great. So when you would get out of college, if you're trained, let's go with a really great job. So a great job would be somebody who comes out of college and is an engineer, maybe a software engineer. They're probably, what is that? What salary is that? It's probably $100,000. Yeah,
I mean, I was going to say like 60 to 70 probably in the Midwest, I would think.
You're right, because of experience and everything.
Right, and then I think 20 or 30 years ago when I graduated college, right? That it might have been like 50 to 55.
Well, that's a great point. Talk about that freaking inflation. I mean, that would have been in that time, you're 55. So that's only gone up maybe 20%, where college has maybe gone up 400%.
Yeah, right.
So what would be, give me an example. Where did you go to school,
when we're
Joe?
talking about University of Cincinnati.
Okay, Cincinnati. You're a Bearcat.
Yeah, Bearcat. Right?
You guys kicked my team's ass for a lot of years, DePaul, in basketball. We used to be good, but never once we got in the Big East.
Yeah, and now it's a football school.
That's
when
right.
I went, it was a basketball school, and like no one went to the football games, and now they're ranked in the top 4.
They're still one of the undefeateds.
Yeah.
So we'll see. There's 2 undefeateds left. There's Cincinnati and Georgia. That's another show. That's our weekly wager. We always talk about that. But we always look for Cincinnati, the teams with the pressure being undefeated, to drop one. But interesting. So let's say Cincinnati. So 25 years ago or 30 years ago, you were in college. Cincinnati. What would 4 years at Cincinnati be?
I think I paid. It was about $6,000. They were on. It was about probably $15,000 a year.
So you get out of there $60K, and your job if you were an engineer, maybe you'd make 50 to 55 at that point, or maybe 45 to 50. So that's not that bad, actually.
And now it was a very well-priced school, even for because a lot of schools were expensive in the 90s, but they still had pretty cheap tuition, fair tuition.
Right. So you're looking at you're looking at making up your, in terms of just if you just went with gross, not any expenses, you'd make that back in about a year and a half of your job.
Yeah, right.
Which you think is reasonable. Now, you think that school is 50 a year?
I bet it's in the 40 to 50 range.
So that's 160K, and the job's only going up 20%, and the school's gone up 400%. That makes no sense.
Maybe it's in the 30 to 40 range. I have no idea, just because I'm not that, I haven't followed it that much, but like, it's got to be more expensive.
And by the way, we're digressing here on different topics, but I'll tell you too, and the other part of...
But it's about labor, and it's about keeping up with inflation. And so, the original question was, are teachers' salaries or raises going up with inflation? Absolutely.
No way. This was my argument. The first thing he said, we had this argument last night, and I was very tired. I'm still very tired. I went away. I had 2 days of Disney, which were like jam-packed in. And I had my kids. We drove down Sunday, spent all day at the park Sunday, all day at the park, a lot of time on Monday. And then I drove back yesterday at 4 a.m. So I was just fried. And I went and I played tennis, which was dumb. I thought I was terrible, but I wanted to just, get off the road kind of thing.
All day at the park. I can't even do that anymore. I'm good for about 4 or 5 hours. And that's enough.
Well, on your phone, how you can log the walking. I think we did 6 miles on the one day at the park, and I had a massive callus on my toe. That's a little too much information. I'm not going to pull an Aaron Rodgers. Right. I'm not going to pull an Aaron Rodgers and show the listeners my toe. But anyway, so this inflation thing, this is a great way to look at it. So I don't think teacher salaries have gone up. I don't think a lot of these salaries have gone up. I think he told me that he believes his employees, he thinks that lower income salaries have gone up. I don't believe that, but maybe they have. Maybe they have, because those are the hardest jobs. Those are probably the jobs that are more, and I used this word incorrectly last week, and I said those are probably more transient jobs, not transitory like inflation, but those are probably more transient jobs where you get workers who come and will switch jobs a lot.
Yeah.
Probably like the lower wage earners, maybe the minimum wage jobs, $15 to $20 an hour. And he has a lot of laborers who work for him, and he's probably seeing that he has to pay them more to get them incentivized to even come to work. Because again, and one of the problems I think in the high labor costs is because there's been so much stimulus by the Fed that people are like, I don't want to work. I'm getting money. Right.
No, it's like they've created like perverse incentives, right, that are distorting these markets. And in the short run, it might feel for people at the lower income scale that this is okay, either by getting gifts from the government or getting $2 or $3 more an hour than they used to get, a year ago. But quickly, right, the prices on everything could increase rapidly, right? And then the worst case is in the 70s when you had, no demand and inflation, stagflation, right?
That's right, and that's what they're worried about now.
Yeah, so that's, and you hear, I heard, I heard a TV personality talking about it and they were talking, and when you used to bring up stagflation 18 months ago, people looked at you like, oh, that will never happen, right? That can't happen. And now it was like, a guy from PEMCO was saying that, like it could be the 70s again. And you're like, that's kind of scary when smart people in the industry are starting to talk about it. It's not just like the conspiracy theory anymore or whatever. It's like, no, this could actually be happening.
Right. So let's talk a little bit. So that's really interesting. And I think that might be its own show. But I think for the next show, I might get some data to compare it with salary increases across, inflation. And I would say, what's funny is like, did we need the CPI to know that when I went to Costco, I was paying about 45 or 50% more for a tri-tip? I don't think I needed the CPI to tell me that. In fact, and one of the things about the CPI is when you read it, and I thought this meant flawed data, and I think it caught up, and I think it was flawed in like March and April. And the reason it was flawed, and I noticed it, and there was a disclaimer on the CPI reporting, and they said that right now, because of COVID, the CPI was being reported remotely. Yeah. In the old days, people that meant that in the old days they would just go in and do surveys in the field. But because and so I think that totally would be flawed.
There's a smudge factor.
Yeah, for sure. Because you know how people are if they're just doing it. If it's not in person, I'm not saying people will fudge, but they'll probably just do whatever they can to get the form in and fill it in.
No, and that's where I was going with it. Like if they're taking in things in and out of the basket, then you can't believe in the number as much as you used to be able to, and then it becomes less meaningful.
And
Right?
honestly,
So
right, and you know who could do the best CPI right now is if Amazon released it. They're going to know better than
yeah,
anyone on everything.
yeah. I
I'll
mean, you
take
could just,
Amazon
yeah,
CPI over the government.
right. I mean,
I mean,
no,
they could do everything.
absolutely.
They could do oil, they could do fuel, they could do salaries, they could do every single consumer good because they have Whole
Yeah.
Foods and they have the meat. They would know. They probably know, and I bet you see real in some of these things, and you're seeing it now. Oil now is getting its move, right? So oil's been kind of it hit the high. I thought it was going to peak around 80, which is kind of the number that it can't go past. It's sort of like getting a lot of resistance in the high 70s, and now it's retracing a little bit. But that the long play on oil, always going into the winter, that's kind of an interesting play there. But I think what I wanted to talk about was all this volatility now with COVID and where you stand on this new Omicron, whatever the name of the new variant is.
Yeah.
It's pretty interesting what happened in the market. So we had Friday, which has typically been a crappy day. So last Friday, we had a pretty good sell-off, ruining a lot of people's Thanksgiving. I don't know if you had exposure, Joe, but I thought,
I didn't have anything on
okay, good for you. That's a short.
because I'm trying to be a day trader.
Well, in traders too, that's generally a time period where a trader's not going to want to hold anything into a weekend, especially now, especially if you're looking to get in and out. It would be a risky play to hold something over a long weekend like that when you have low volume Friday. And one of the things about Friday that's interesting, and I think you probably know this from trading because you're seeing, I mean, if you're really trading, I wonder how many day traders are really watching volume.
It's one of the most important things to watch, though, don't you?
I mean, 100%.
You have to be.
That's what I'd be watching. But so you get a Friday, and let's be real here. This is a real I always talk about college football in another show, but these are real people. So you know what those guys were doing? Those guys weren't trading. The guys weren't there trading on Friday.
Oh, it's the JV team.
Yeah, yeah, and
that's the way I would always talk about it. Like, the big bosses are gone, right?
Right.
And I used to be the guy that would back up when the big boss left, right?
Absolutely.
And I would be running the curves, and so your moves can get exaggerated because you have lack of liquidity and you probably have lack of experience.
Right. And so if you looked at the volume and you know a lot of things, so a lot of things that went down on Friday on low volume, Monday was somewhat predictable. If you ask me,
Yeah.
to have that, to have the retrace and take a lot of that back as on small volume again, bringing it back up. And then we had the COVID scare on Monday night. And I noticed this, and I'll tell you, I don't know. Do you have any crypto, Joe, or do you trade any crypto?
I actually don't believe in crypto, and I'm rethinking that, but I always kind of
But wait,
believe in
everyone is. I mean, if the SEC is allowing ETFs, crypto
Right?
ETFs, well, and this is what I've been telling you listeners for like the last 6 months. I said, look, it's pretty obvious to me that Bitcoin is going to go to 100,000 simply because the base, and people don't know how to construct an ETF and how it's really constructed. But essentially, like if you, in the old days, so if you had a gold ETF, you would actually have to store physical gold somewhere. So
Yeah.
these guys who have these Bitcoin ETFs are going to actually have to hold Bitcoin. So it's going to really stabilize that as a whatever, it's a currency or whatever you want to call it. It's going to really stabilize that. And because as they add it and people are going to get exposure to it, they're going to have to keep bumping it up and adding it to their ETF, which will stabilize the price, get it to a less volatile state, and also bump the value up probably over, you had that one Bitcoin ETF, which was a Canadian ETF, and that thing was they were charging 200 basis points, Joe. I mean, talk about screwing people.
Right.
So they were charging 200 basis points on that. Now you're going to get it back to probably a normal number. You'll probably get 100 basis points or maybe 1.5 for Bitcoin because I think there's more expense because of the security risk in Bitcoin. There's probably a heavier expense to hold it. But I would tell you that as those ETFs come into play, and there's something like 58 of them that are in the offing or that are trying to get approval, and they're getting denied too. A lot of them are getting denied by the SEC. But there's something like 58 that are waiting in line to be approved. And as they get added, it's going to bump it up. And they may be Ethereum ETFs, probably the more popular coins. Ethereum and Bitcoin are going to be the ones that are more prevalent. But that's what's going to take it over 100K.
Yeah, we discussed something like this on an earlier episode, and I think it's just the nature of the ETFs. So, milk, cheese, like products that coffee, like they had no volume going in these pits, right? No orders were going in these pits for years.
Right.
And then they started these like broad-based commodity ETFs that included like maybe 1% milk or cheese or coffee or whatever. And then all of a sudden volume started going into these products that didn't see any volume. So I think maybe the same way, like when these cryptos get introduced to an ETF, right? Well, now you just created a lot of customers for it, because they're going to have to buy, if it's a basket of 10 stocks, cryptos in this ETF, right? That's going to generate orders in 7 cryptos that probably would have never got the orders because they need 10 and there's only 3.
That's right. Well, that's what happens. I mean, that's, if you look at the inflows, and this again is, you talk about volumes, but look at inflows and outflows. As you look at what's trending, if you wanted to pull up the inflow and outflow report of the ETFs, that'll tell you what's going on in the market. I mean, when people are moving into, there's a lot of moves into certain things. Commodities was one. And by the way, that DBC, one thing on that DBC, which I love, and I'll tell you a couple stories about RSI, and I know I'm kind of bringing you in the RSI world. I think I'm going to make you convert to that, Joe. But DBC, by the way, is oversold right now. But I would think on the heels of what the Fed's saying, about inflation, I think we have more true believers in that. So I would see people getting into that. So we did enter a position for myself, my clients, for full disclosure, that I am in that because I do believe in that as a hedge against inflation, even if it's really just a defensive play. And it's okay to be defensive in your portfolios now. I think now more than ever, if you're going to construct a really balanced portfolio, it's still good. Tech still works because the margins are killer. Now, overvalued tech, you saw a huge move. Do you have any Apple, Joe, or you don't have anything really right now because you're just doing short-term trades, right?
Yeah. No, but I haven't traded Apple recently, but yeah, I've been noticing it's at all-time highs, right?
Right, and it's up, it's up another 6% over the last 2 days when the market was getting slammed. It's been one of the only winners in the last week when you look at the days. One of the other ones I want to bring up is a stock we talked about, RSI, and I didn't play any options in it. I was a holder, my clients are a holder, and I love this space. So it's in the EV space, and it's a chip company called AMBA. And I had talked about it. Did you see?
Oh, shit. Yeah, I
remember. Okay, I told you about this stock, Joe, like last week or 2 weeks ago.
Okay. Well, you tell your story, and I'll tell you my day.
Okay. So I had, I was a long holder in AMBA. AMBA is a great chip company. They're really in the EV forefront. They it's ticker symbol AMBA.
Stock watch.
And I love the EV space. I mean, this stock, if you look at it, is something like in a year, this thing's up 171%. But they keep their earnings are like incredible. Every earnings report, it's like 40%. Guidance is higher. They're killing it. It's a very high. EPS is still negative 1.34, but this is the growth space right now in the market. Everyone's doing EV cars. All you're seeing is commercials for EV cars. I don't have an EV car. I wanted one. I just don't want a Tesla because everyone has one. But this EV space is blowing up. There's an ETF I'm also in called LIT, L-I-T, which is the lithium, and it's tracking essentially the battery position of the.
You are listening to the Weekly Wager, the NFL edition,
I was in
with the doctor
I
and
bought
Uncle
it.
B.
I would tell you, full disclosure, I kind of made a mistake. I bought it really high. I bought it.
How you doing,
Doctor?
We already had some of those Thursday games.
Not
so
the
we got
highest.
a short week.
It wasn't
this
like
week.
into the red
Had some
zone
interesting action. We had
where
the
you shouldn't
Bears
touch
and
it,
the
but it was
Lions.
definitely
and
definitely
the way I
overbought.
saw it,
and then
Lions
I watched
ended
it,
up pushing.
and
It was a push
took
for me.
a little bit out of it.
The Bears
but I did some dollar cost averaging and bought into it, and I bought into it a little bit later.
Dallas Raiders
and as it fell, I got my average price down.
Then we had the Buffalo.
And I noticed
it
was
game
way
Buffalo walked
overdone.
away pretty easy.
And I was getting a little bit nervous going into earnings. There were a couple good analyst reviews on
wager
it.
in the
Guided
NFL
up. One of the price targets
the
was
Thanksgiving Day
230, which
special.
actually got
we have some interesting
taken out
games.
today.
What did you think of the Thursday games
in the morning trading? And I was,
well,
I have
I
a
hope
lot of
Sunday
shares
plays
for my
out the
clients. I
same
have
way.
some
I think
personally for myself.
I think it worked out exactly how we would have liked.
Watched it in earnings and it exploded last night. It went up. I think it was up 26.
We talked about watching.
After hours trading,
how good are they?
It was up about $24.
I had heard somebody else that got 46. Got a push. Is that what happened? You got two on it, got a push.
I got a push.
They
were
226
this morning.
They started off really well, and I was looking
20%.
I bet that I'm not interested in two teams that are.
And so I took a little off the table
for sure
because I was probably overweighted in it.
Detroit did come out
and play
well,
and
they were competitive.
I like this
Chicago,
company.
We're still waiting
it's
for
a long-term
hold
hold for me.
Nagy gets canned.
I think it's
I think
the future is EV space, and
they
that's
have been
space I
close
definitely
in all their
would
losses
recommend
this year,
people
and
to
it was
be in
another
right now.
close.
So you tell me your story, and I hope it's
I hope
it's as good as mine.
Raiders and the Bills.
No, so this dovetails
pretty good
perfectly,
overall day
right?
for the
So
Blue
I
Raiders
do
on Thursday.
That's
and
all
some
right.
nice
I
turkey.
do
I hope you
remember
had some
we talked
turkey
about
yourself.
this,
Let's talk about the games we're going to cover this weekend. A shorter schedule. Did we get any? And we're going to talk about did we learn anything on the Mirror game? And I'm going to bring it up. We can bring it up later when we get to it.
Right?
But we're going to talk
and the
about
chat room came
Tennessee,
out with
New
notes
England.
on Amberella.
We're going to talk about Pittsburgh, Cincinnati, Tampa Bay, Indy, Minnesota, San Francisco, LA Rams, and Green Bay. Very interesting to myself.
About
a lot of injury things.
That's where it got. Yeah, that was. So when did you get that?
And that's the last one we're going to cover.
Well, I got that before the market.
What are you thinking? What do you think?
So you got that today. So it had because it had the big bounce after hours on great
the best team in the AFC right now. This New England team.
Perfect example.
They're favored by 7 against Tennessee at home.
So you have to look at that range
that's
Amarillo had overnight,
obviously.
which you said was like 30
That's kind of how I've gone about handicapping.
I think it went up to. I think it went up about 25 after hours.
On how I
was
looked
flat
at
on the day
Raider Dallas
going
game,
into the earnings call.
It's interesting when we started listening to
25
stories
after
that
hours,
we discussed. The story seemed to be,
is that
and I heard it even again Thursday, is that the Raiders had quit, and I just found it hard to believe that 5 and 5
so that
team
means
in
the
the
stock price
NFL.
can sell off
As
kind of
we were
rapidly,
watching the
and
Detroit
what that
game, I said to myself, "This is why I put a money line bet in on the Raiders."
Taking profits,
because I was watching two
and
teams in the morning play combined do not have 5 wins in the NFL.
So I had another sell level at 206.
Yeah, right.
Right, and I had this
hearing
before the market
story
opened.
that says that the Raiders had quit. I said, "There's just no way that a 5-5 team in the NFL
and this is the
has quit."
second time that I've done.
We go opposite.
So you missed the big pop,
and we do pretty good.
You might
no, I
obviously
didn't miss
the story is that New England's playing well.
I sold it at
Tennessee is
206,
missing some pieces, so we got to keep the network story in mind. But what I'm looking at is the spread.
Well,
let's
talk about a couple of these injury things. The injuries are playing a big factor in the NFL. You know, on offense, Tennessee's looking at, obviously they don't have Derrick Henry who's on IR, but their backup, Donata Freeman, looks like he's questionable. AJ Brown is questionable.
And then now, when we were
Julio
started
Jones,
talking,
who really has done nothing this year. He's on IR already. And then their defense, they have 5-6 guys who are in their starting base 3-4 defense that are questionable going into the game.
And I just wanted to be short today on it.
New England has some minor injuries. They have some injuries at running back. Hunter Henry, tight end problems with Jimmy Smith, and then a couple injuries on defense. But New England going in this much healthier. So what do you think in spread-wise in this one?
My mindset, because when I wanted to sell
that they're aware of all that
buy, and that happened to me
when they send
in
this
Amarillo
line
this
out
morning,
and
and
start
it
taking
also
money on the
happened to
game.
me in
And we see a
mRNA
game that opened at
last week.
2.5.
Right, and I would.
And
the only thing I would have said on
way
that
up
one
to
is to be
7
careful
with
on was that.
money.
You had to take
And
into account how
that
oversold
people
that
are
thing
starting
was.
to adjust
And
a
so it
little
had
bit
almost a technical
on
need
the
to break out
strength line
anyway.
of
I mean,
New
just off
England.
all the being oversold. And I
You
think
know, this
we
is a
saw
tough
that
game because
where I bumped in
if
and
we
out
had
on
opportunity
a
of betting
trade
this
yesterday
game, it was at 3.
where I took advantage of sort of a,
we
another
missed the
2
4,
bad
we
days of
missed the
trading
6, now we're playing
on
at 7.
PayPal.
I really like New England.
So PayPal had a little bit of a bump from yesterday to today. Now, I don't know if I want to be in that long term.
Now that we're
so
at
I got out of
7
it essentially this morning.
It's got to be a no play
but
for me.
I did
know
you
talked about it, and you talked about it.
So what are you planning on doing with your
AMBA?
You talked about the Raiders. You're still in the
the Raiders became much more of a
yeah. So I'm just watching it every time.
Which is where I got him when I made my wager on that game. And so that was the deciding factor in me doing that. So, and I think again, this goes into what we talked about before.
And it's not scary. It stayed under the 227 high. Like it sucked holding it a short at 206 when it's trading 227. But it peaked,
a strong
and it looks like it's been coming off of its peak reasonably well.
Is that Bill Belichick does not lose this game at home.
It does look like it's been
which means we have to do one of two things. Either we have to get involved in a teaser.
And so I know it's a dangerous
one to be short, on the money line,
but I'm just trying to be a little stubborn and hopefully I close it out
to get $100 return. And
so
I'm not in the mood to do either one of those
what
because
you're
I don't
holding
want to play
on to
around
is the hopes that this thing
with a teaser this week. So
is a little bit overbought
I just kind of lay it out
that
2
days,
so
and then it gets under 206, right?
It doesn't deter.
Yeah, so I sold a very small amount.
Strong team in New England at home.
And I don't know if this is right or wrong.
They got offense,
I try to think about it.
Run the ball. They're well coached. They're at home.
So I'll enter position with like a third of the size I want. If it goes against me, I can add another third, and then maybe another third.
Yeah,
and then hopefully I get that retracement.
Let's go over. So that's a tough game,
and I'll tell you what's really interesting.
interesting. And I think if you might want to be, you might have let's go to Uncle B. Let's look at because might as well talk about where I look at it. So this stock has rallied really hard in the overbought conditions a couple times. So now it's at the 70 mark of overbought, which is it's getting up there. It's a little bit better, but it was the Giants last week. When you get to 70 on the RSI, you're getting into overbought dogs here with Indy. So what I'm saying right now is, but this thing is sat. This thing sat for a month in September overbought.
Well, Indianapolis is obviously.
I'm just saying, you probably. But the thing you have on your side right now is you have the volatility because of the variant.
That are successful.
So if there's a case,
they can stop the run, but they can also run the ball, and they're balanced.
Did you read any of the stories on
the new variant? So now we got two teams matching up against each other. I feel as if Indianapolis is a good play, but they're coming off of such a high-scoring game of Buffalo.
So I guess when
they're playing against Tom Brady, who I don't like to go against. So
this was detected in
Africa. It's a difficult game here,
and I think there's some huge number. I'm looking at Tampa Bay's injury-wise, like 25%
that are still unvaccinated.
Well, no, it's higher than that. Questionable. 25% have HIV for this one. You have a couple starters on defense. It's maybe that's not the right number. Maybe it was just in one country. But there's a huge number of the population that is. So you do have some questions on and so this vaccine, the variant or Corona or COVID, sat inside a person for about 120 days and kind of manifested into something else. So and that's how they got this kind of Omicron variant.
What are you thinking here?
When you have people who are immunodeficient,
I get tentative.
That becomes a real big problem. And I was watching something
right because he's one of those guys like the
CEO
Weasel.
of Regeneron. Was talking about it.
Aaron Rodgers, who if he gets the ball at the end of
do its own thing and creates some new kind of variant inside someone like that who hasn't been vaccinated.
Hard to bet against him.
And you have what you're saying. Africa. I think the number of vaccinations is in the
25%
range.
Yeah, right.
So you have a plethora of problems there with not having the vaccine. But let's go back to AMBA in position. So what I think you probably are thinking is, if we have market corrections because of that'll be your chance because everything went down on Friday.
So that'll be one of the plays, Indy plus
on Tuesday, pretty much.
So what do you think about the Pittsburgh Cincinnati Bengals matchup? Very good.
Yeah, and I'm just trying to learn how to be the day trader. And I just think
5-4 Steelers against the 6-4 Bengals.
If we can get
Cincinnati 3.5 point home favorites. They're both. Neither of these teams are really dominant against the spread.
But we never got through 206, and now we're kind of hanging out
in terms of injuries
at the top. But I think
Pittsburgh
it's
looks
still
relatively healthy.
Nicely
the Bengals here relatively healthy as well, so not as much of a factor there. This is just one of those games.
Okay.
It usually plays.
Now I told you,
and I'm making money in other stocks, so
either
it's manageable because other things are happening.
Yeah, I like this game. I like.
You told me last week we talked about
we're still getting more.
And I actually did take a really quick position in it, and I got out. I was happy.
Public perception is more that Cincinnati
if you look at it,
is better than Pittsburgh. I think
win over
folks are not that high on Pittsburgh. But I see well-coached teams as we get down into November, December. This starts to fit into the mode of Pittsburgh.
Yeah, and I
think you also notice as we dive into the numbers, we have some interesting.
Yeah, and so the way that I'm learning how to find like good opportunities,
he's from Ohio.
You look for range.
You look at how he's done when he plays,
and then if you can get range,
in the state of Ohio,
find out why
the tremendous record winning straight up.
Give me an example. Do you have an example where you talk about range?
I think he hasn't covered against the spread maybe once or twice out of 9 or 10 games.
Is that what you're talking about?
Okay, so
he likes heading back.
Yeah, so basically it's like
he likes it.
What are they talking about on
more than 3 points here? We've got a defense. We've got a good head coach. We've got a veteran quarterback in a divisional game where we're getting more than a field goal.
A lot of people do these penny stocks.
We'll see in a little bit if that's one of the
other stocks that move every day, like the Teslas or the Nvidias, right? Because they are
thinking about the Minnesota and San Francisco game. So Minnesota actually now pretty interesting, came through strong against Green Bay.
One thing that I'm starting to do,
both of these teams relatively healthy, will have pretty much a full core, a little bit dinged up.
And you can substitute Apple or Microsoft, and for either one of those.
What are you seeing here?
But then I can watch the Tesla
Minnesota's
move,
got a brutal
and then if I see
schedule.
Tesla,
and they
if I see the spider
a good job of competing,
rallying.
But they've had two pretty much must-win situations if you look at their recent schedule.
And then I also see a team in San Francisco that needed to get healthy. They were missing a couple of things. They're well coached, and so if we take a short
those are massive holdings now.
I think we're catching San Francisco on the upswing, something similar to what we've seen with New England, but New England's a couple of games more down the road on that.
The SPY was something different than it is now.
I really avoid teams that are coming out of a divisional matchup,
which is it's the largest. I'm sure. I think it's the largest ETF
a big time
on
win
the planet.
for Minnesota.
It is massive.
It's
State
important
Street,
division.
Massive.
They've won 2 big games. They go back out on the road to the West Coast.
Look at the weight.
And they're playing a
the
San
cap
Fran
weight
team
on like 10
that seems
stocks
to
is
be
like
putting
50%
things
of the
together,
entire
and
thing.
they will run it.
You know, when you have like Amazon in there,
they
Apple
will run it
in
right
there.
down your throat.
Microsoft in there.
To be on Minnesota.
It's not really a very balanced. I actually like now that SPLV, which is a lower volatility one.
The team looks pretty good.
They have a lot of playmakers. I did, if you look at the correlation too.
Last few games,
reminding me, I want to talk about this Bitcoin correlation.
They've had some near misses.
By the way, as a barometer for the market.
Let's head next to another divisional game, which is kind of interesting here.
If you look at the makeup of those ETFs,
game,
those big boys,
we had
essentially make up the most of the movement. There's 490 other stocks in there that hardly make a dent at all in that ETF.
But we have
so it's kind of like we have that 500 stocks in there, and you think you're getting diversity.
Mayfield's not very healthy.
It's a diversified portfolio, and you are to an extent. But really, you can almost have like the Q10, which would be like the 10 stocks that make up 80% or 50%. And actually, you didn't hear that idea, but you can actually have a ETF like that where it's just the Q10, where it would just be like those 10 stocks: Microsoft, Apple, Amazon, Facebook, Nvidia, whatever, that make up most of that S&P 500, and that would be it. And then the rest aren't doing anything.
We have a divisional team that's been getting beat.
So, and then I think it might just be important to lay the groundwork of a market capitalized index versus
Cleveland is in
index, right?
For sure.
That would equal. And so the Dow
on the road,
is
they've been getting beat up by the public.
So, I don't know. When I was saying a while ago, it was about 7 or 8 shares.
If I was hopeful,
I
actually want to
company,
see Case
all 30
Keenum.
companies.
I don't want to see
7 or 8 shares.
I know that
represent that index, and if you add them all up, you get to that price, right? But the market cap is exactly what you said. It's based on the size of the company.
And at the end of the day, Baltimore comes down to their quarterback.
I think I'm remembering that properly,
right? And we could go over that, but that's what it is essentially. And then those indexes, the way that those ETFs work is they have to trade in specific, and this is really checked heavily by the SEC. They're checked to make sure that index is there's no variation on it, and
yes, they are, and they
have massive amount of traders. Trade like for the SPY.
Absolutely.
It's right, and this dovetails back into what we were talking about.
And it's darn near every other game.
Is that
you see 17-19, then the next week 23-7, then you see a 25-31, then 34-6. Then you see a 34-31, then 10-22, then a 16-13.
What that really means
they played a lot of close games.
Orders are coming into Tesla all the time,
and then Cleveland can run the football, and they like to play a physical game. So
like if Amazon's going up, right, and all these other things are going up, well, they're going to have to be driving more orders than Tesla too, because they're
in the network news
ETFs, right
now.
I think I'm right on that.
And similar to the Raiders in that spot, right? They weren't painted real pretty in Thursday's pre-games, and when they're talking about them being done, then we're going to get the same story in Chicago. So you look for a group of men to show up, get some points in a divisional game where they know someone well, and get ready for a fist fight.
Or a guy on the floor. Like professionally, it's kind of crazy.
Most of the money, absolutely. You got the guy in the basement. You got the guy in the basement in Chicago with 15 screens in his mom's basement.
Shit, in Ohio.
Absolutely.
Yeah, trading $1 billion cover.
Right,
my team with the weasel. Ellie Rams at Green Bay, and I haven't seen this in a long time. Green Bay getting 1 point at home. Actually, it probably wouldn't be as efficient.
Spread. They're 4-0
being on that floor. You might hear things. You would get the benefit of hearing things, but I think that the market is so spread out. Where
they're 9-2
against the spread this year. I just think we're just going through all these changes right now. It's 4-6 against spread, 7-3. The world is evolving.
Last 10, 7-3 against spread. So 4-6 against spread last 3. But Green Bay getting a point. I'm going to get in there, by the way. I have it loaded on my screen, which is as a COVID memo to kind of get in there and check it out.
Dude, I mean, it's not for everybody. It's different.
We also have Aaron Jones potentially coming back. And you see that Dillon may be great, but I think the strength of that running game is when they have. And I just think it would be so awesome for the Aaron Jones to use the name, but I think it would be great for the listener.
That's a pretty damn good
backfield. We could bring something in every. I could do something.
And then you have the Rams
probably every show
fairly healthy
to talk about. I want to talk about one. I had a question from somebody.
Not look great.
Question from Steve.
In recent weeks, they're up, they're down,
and Steve kind of wanted to know what the correlation is between Bitcoin, because we talked about it. I kind of wanted to bring this up and dovetail in what we talked about earlier. I'm using your word now, dovetailing. So what are you seeing in this game? But I wanted to bring up the fact that I have my own studied this for about 4 months.
LA Rams did it myself.
Certainly going to be, and I wanted to know the correlation between
for the Pacific
Bitcoin and I just used the S&P 500.
Great game. This is a big game for Green Bay because 8-4 changes a lot of things around.
What is it? And what do you? Let me see if you know this.
With their head,
and I'm going to give a great example. What do you think of the correlation?
Yeah, I get the same feeling on this game as I did
inversely correlated or not correlated.
It kind of draws me into one direction, and I never like that.
To be inversely correlated.
So if you look at the spread,
so it's not like a hedge.
What
it's
you're
not
telling
gold,
me when they
and I know
drop
people are
this
talking
number,
about it, but it's not a hedge. It's not like the old days where everything got
that
shelled
Aaron
and
Rodgers
gold
can
was
lose this game at home.
So
and I
what we're
find that
seeing
really
is,
hard to
and the
believe.
biggest move you probably remember, were you trading in 2008?
Anytime I find myself in a situation where I don't want to believe a number,
I mean, gold went bananas during the housing market crash because people were like,
"What's going on here?" Right?
I hated
everything that you just said. Dead on. I cannot disagree whatsoever.
Bitcoin came out.
So why in the world
is
someone telling me?
So here's the thing, and you're right, but it's not. It doesn't trade that way. So I'll give you the perfect example.
They've moved the Rams.
So on Tuesday morning, and I do have some Bitcoin.
Yeah,
and there's no endorsement. And by the way, we didn't endorse Awesome Coffee. They're not paying us any money. I'm just saying because it's informational.
We're into almost December.
And the same thing is with Coinbase. I'm not on my team, and we talked about that the last couple of weeks. I just have some crypto on.
Pros are a little different. The kids are,
and so
it's the same thing. You have an LA team.
I do have. I own right now. I own some Bitcoin.
75, 80 degree weather.
I own about
go to Green Bay.
We're now Ethereum, I think.
We're sub.
Yeah, it's not a large investment.
30,
it's just something
game
for. I want to
you know
watch
how
it.
things can change.
Yeah, you keep your eye on it.
In the Midwest,
so for
I actually think I got
years, you could, the
on
weather
a sidebar.
On a dime,
I think I got audited,
and we might get some snow on Saturday.
Really?
The only thing about all these people that are holding this
teams go in there,
the
Packers have a knack for knowing how the field's going to play.
Oh, that's right. That is an indicator. That probably is place where they would audit.
I want to go back.
That makes perfect sense,
Sanders
dude.
Played the
but I don't want to be a hater on Bitcoin. I am a hater on Bitcoin.
I don't know if they iced the field, but it sure seemed like it.
So
I think there's some advantages here that underlie the actual players on the field. Definitely the home field advantage. Green Bay covering regularly at home. One of the best home field advantages in pro football.
And I had never traded Bitcoin.
What do you think?
And they said I had a Robinhood account. I was like, I don't have a Robinhood account.
Right.
I can't get past that.
But let's talk about this. So you would think it would be opposite, but it's not. So here's what I found out. I tracked it for about 6 months.
The picture that we just painted.
And I noticed that about 70% of the time when Bitcoin, when the S&P 500 was up,
I would think if there was no word of the,
and so to me it traded a positive correlation, and then what it brought to me
about having a
COVID correlated, I should say,
something to do with lesions.
And then when it came, and it was perfect on Monday, I did not look at futures Monday night.
I guess.
I didn't look at anything Monday night.
And I want to tell you this.
I just looked at my coin at Robinhood to check out what was going on with that.
I have not fixed it.
And I noticed it was down.
I think he can play with it.
I mean,
they can do a lot of different things with shoes. I
think that was the Omicron story or whatever that night.
Okay.
And that took it down. So I would say
I'm certainly on
it's
the
a
Packers
good,
on this one,
you know how we look at futures a lot of times. I think the Bitcoin now is a really good indicator of where the market's going to be on a day-to-day basis. It's kind of interesting. I'm following it, and it does track that way. So over the last 2 days, we saw a good play.
So hey, let's break this down. Let's focus on the weekly wager. We kind of set these up in order to play as an ABC.
So it has moved in correlation with the S&P 500. I don't know if that's so much to do.
What are you thinking here?
Where these ETFs are trading it.
All right, so
but it's just something to watch, and it does trade unlike other things.
Let's go.
I think gold now does gold trade. Gold trades 24 hours. There's only about 10 things that trade 24 hours.
I just have to trust Bill Belichick at home.
I would imagine gold probably
does.
Like I would just assume
this line's telling me that shark money. This is those money that's moved.
But I think that but there's like 10.
So I'm going to go with the money that's moved this thing.
I know gold does.
I would try.
I don't think
those
don't.
6.5 or 6. Get
this
thing below
the spider and the spider
because of the spread movement is New England Patriots.
Got
it. The Patriots and
so anyway, so I think
so.
What I saw when I got into
one of those states with
the day to day, if I'm looking instead of looking at futures, or I might look at futures at the same time.
You definitely
looking at Bitcoin kind of can be a good indicator of what's going on.
And you'll see if you look at lines nowadays, you'll see several different lines from different services and some of the lines makers. So you have the ability. In the old days, you would just have your one guy you go to, not many options.
If you're finding
just keep that in mind. So New England's
the
first pick, a C game for Uncle B.
Let's wrap on this one because I have one thing I want to talk about. I want to talk about
Why don't we do this? Why don't we put New England weekend.
So again, this is virus play, right?
And we saw how we had
some
of one of those two teams at home.
The COVID stock plays or Zoom.
Would you put equal units on those two games?
That thing has gotten killed.
Yeah,
and a lot of these stocks that were getting killed kind of bounced.
One of them were getting
almost off a
technical.
Yeah, but they bounced on COVID, like the stay-at-home stocks.
If you want to be safe,
so those bounced and they got sold off. I had owned a couple. Like I bought Okta for like 5 minutes.
And you're not getting crazy.
That was one. That's a security
company.
Those are
good wagers, so to speak. Now, if we want to get
security,
we're going to move up.
And then so Pfizer though is really interesting game. So Pfizer now is breaking out. We bought. I had a friend. Actually, he went on the trip. He's my son's friend, and we went to Disney. And
Cleveland Browns plus 3.5. And what you see is a close game here,
not
and I'll tell
quite
you,
like
right,
Jackson, but they were like long dated.
Superman for that
January,
team, and they win.
Or would you consider that a leap?
Coming down to field goals. So the B game,
it's got to be 6 months out or more.
Do you have any other games where we're going to go right? So no. So he bought January 2022, I think, whatever the latest date expiration is, and he had bought 60 and 65 out of the money calls. And he had bought them. Now they're coming into range today again. So Pfizer traded down in the morning.
So
but now it's up to 2.5%. There probably is some news. I think this is a really interesting time for Pfizer. It's a value stock.
What do you have for your A games for this
price
week?
To earnings? Traded up process of elimination 2.33, breaking out to
why don't we do this? I'll take my
it still has it's got a dividend for 3%. It's not quite inflation, but 3% there with the gains.
And hope he doesn't let us
probably
down.
had a pretty good year for the stock.
So we got 2 A's as well.
Year to date, the stock's up 40%.
I like it. You heard it.
You have the dividend on top of that,
in,
3%.
And I'll tell you, I like that pick. That's going to be that's a conviction pick for me.
But I think this thing has
I also like the
20
San
to
Francisco pick. I think it's very interesting.
I'll tell you why.
Especially
the
taking
news
into
has come
account
out.
what we
First
said
off,
about
Pfizer was the first one
having a very.
And I want to tell you,
and
I want to ask you, maybe
Joe,
ready for
at the end of this, maybe when
I
San Francisco playing well,
give like my little
on a
speech
Thanksgiving
on
week.
I'm going to ask you. I'm going to ask you what you think and how you might play this. Okay, because I did have my friend. He was asking me.
Those are the picks
and I sent you the calls. Do you have the calls on your phone? The ones that I texted you.
Wager. Hey, if you're listening or watching,
maybe we can look at
his
specifically. His name's David, and talk about what you would do with those. So anyway, so Pfizer now is up 2% today. It's making a pretty good move. And my thoughts on Pfizer are this: I think that they had this before the variant. They had a pill which gets you to 95%, effective. That's pretty awesome. So you think about how hard it is to get the shot, right? Because you have to go somewhere. Now, if the pill comes in the mail, you can take it. Or if if it gets delivered to you, it's so much easier to get it out to people. Like in a place like where you have Africa, you just have a problem. You have an infrastructure problem there. How do you get it to them, right? But if
you took away the bottleneck. You took away the bottleneck of the nerves, right?
That's right. So think about Pfizer as a buy. It's a really interesting long play to me. But here's what Pfizer also came out and said. This variant, we've had some weird stories like Moderna. There was an article about Moderna in the Financial Times, and Moderna was saying, oh, they don't know if they have a grasp on it. And to me, it was a little manipulative. Like it was kind of I want to say it flat out. And CNBC was kind of like saying, oh, I don't know. It's basically my point is I think it seemed like bullshit. Because they wanted to maybe make themselves. They've been a star, Moderna mRNA. That thing's up. What is that up? I remember when it traded in the 50s, maybe a year and a half ago.
Yeah, it's trading like what, 328 right now.
Yeah, and I kind of feel like the feeling I'm getting from Moderna is that it certainly is in their best interest to make it more difficult. you know what I'm saying?
Yeah. Or maybe they just make a new vaccine, because. Just change it enough to I mean this is going to be good for all the drug companies.
So my point is Pfizer seemed to be ahead of it. Yeah. And I think because they have this potential pill, which and I saw Gottlieb on CNBC and he said, look, if you take the vaccine or get the booster, and I think what we're talking about is something that's going to happen for for the rest of our lives, or at least for the near future. You're going to have to take this pill. And once we get to herd immunity or closer, you're not going to have this variant crap that's coming up. And so this pill could be one of the solutions to getting this shit handled all over the place, where people, where I'm sure most of the people in Africa, they probably would take it.
And I think it's going to be cost effective compared to the other treatments too.
Right. So I think there's a reason this thing is getting played. It's moving dramatically up. It was at 40 in October, and now it's at 52. That's a big move right there. That's a 30% move, and I think there's more here. So where
do you think it could go?
I don't know. I think 20% more in this stock this year. Not this year, but over the next like 2-3 months. And it'll be on news. But it'll be on news that they're either getting this dosage out to many areas, which is this pill form, which is going to really, really, it's really going to make it easier for people to take this. That's the thing. I mean, they literally, I would think that the U.S. might just buy that shit and just like mail it to everybody.
Yeah.
I mean,
So if I had that opinion, right? What if I told you the 60-65 call spread cost 65 cents?
That's
so that means for $65 you could win 500 if Pfizer is above 65 on January.
So what's the date range? So 60.
Well, you can pick it for anyone you want. I picked January, the same one, January 21 in the year 22, right?
Right.
It's about what, 3-4 months out.
And let's talk about this ketosis concept too, or the idea that you take something long, and you're not thinking about being in the money. You're just thinking about moving it up the line.
Right. Yeah, and you need that movement to happen quickly, right?
Right.
So when that VIX really pops, and they put a lot of value into that option because the move is happening. And like we're selling off, and then you can sell it for more, and you never even get close to it, right?
Right. So we did that yesterday. So we bought we were driving in the car and we were bored. It was a long drive from LA.
I mean, how cool is it that you can be driving or trading?
Well, that's what it was. So
first off,
and so David didn't know. He's a new trader. He's like a lot of these guys, these Reddit guys, and like he didn't know. First off, I told him to listen to the PayPal show because he should learn about what we talked about there, which is maybe shorting when you were in the money. You know what I'm saying? Remember that show we did when you talked about
yeah. When it ran up in the pre-market, my friend didn't sell it because he didn't know how.
Right, but he didn't understand the concept that you could just be a little bit closer to being in the money and not have to be in the money to actually make money on the option. He didn't even understand that. So
so basically, there's like 5 components of an option's value, right? And the underlying is one of those components. But then there's volatility and theta and gamma, right? They're also parts. So
we should actually talk about that with examples on another show. I mean, we're going kind of long today, but we should talk about that on another show just to break down like the elements of it. As I think people trade these and they're like, hey, if it goes up, I'm gonna make money, but they don't really understand maybe the dynamics of what's really going on and how you can actually make money. So what I would ask you, Joe, is what if we took like a long term, like a leap in Pfizer, and we went out like 6 months, and we got a cheaper option. Or I don't know what it'd be, but let's look at what's a 6-month option on Pfizer.
Yeah.
And we just want to be a little bit closer to the money.
Okay, so that's.
But we also might expect that. So my expectation would be this. This is my thought. I think Pfizer still has a really big move. It's exploding upwards. I think it's got a bigger move to the upside, but I want to pay very little to get in the option, and I want to get out of it probably in a month. But I think that it'll move really strong into the final month. What are we looking at for like
for the rest for the rest of this year is kind of what you're saying?
Well,
right? Like
I want to get out of it the rest of the year, but I want to have a longer term expiration.
Okay, we could do that.
So what would that be looking like in like 6 months on Pfizer? Let's just say for like a 60.
So if we look at June, and you wanted the June 55 call, you could get that for about $475 right now.
So that's pretty expensive. Now, what if I want to be out of
the 60 call is about $3.
Okay.
But when we're talking about kurtosis options, those aren't kurtosis. If you wanted like the 75 call or the 80 call,
that's what I was thinking. Like I was thinking of the 80 call.
You could buy the 80 call for about 60 cents.
See there, that's I think that's an interesting buy. The 80 call with 6 months of expiration. So if you get a move, what do you think you could make in that? Let's say you get a 15% move in Pfizer or a 20% move in Pfizer by the end of the year, and you get that, yeah.
So this is a good question, right? And the reason why it's a good question is how does the average person do this, right? So the way I would do it is you say by the end of the year, that's December, that's 60 days from now, okay? So I gave you the June option. I'm going to look at the April option when I'm comparing price to try to get the same time frame. And then you said if it moves up from 55 where it's trading now to 65,
Right.
That's 15 points away from that 80 call. Okay. So I'm going to go look at the, I've got March. I'm just going to use March because I don't have an April. And I'm going to look at something 15 points away from at the money. And that would be about maybe $1.30.
Right.
So I don't think that's why I was trying to get, okay, so then we did that, right?
Mm-hmm.
So now let's look at the December. Let's look at the December 70 call. We can buy that for 7 cents. Okay, so that's for December 17th, the 70 call. Now we could go down a little bit lower. Let me get there. I could buy the 65 call for 17 cents. And if we get that move, a good move, that's only 2 weeks away though.
Maybe, I don't know if that's enough time on that.
Yeah, so maybe we would just wait to make the play when it was out 2 weeks, and then if you get the move, but when you buy that longer term option, you're not going to get that reward because you still have 4 months that the stock could sell off, right? But if we bought it with shorter term, we could make that bet a little better. But sorry about that.
No, that's good, and I want to bring that up. I want to follow this. We're going to follow this Pfizer news and what's going on with Pfizer the next couple weeks into the new year, because that's kind of an interesting play to me. You know, a lot of these stocks, something like Pfizer, it's been a consistent dividend stock, you know, probably one you would write covered calls on in prior years. But, you know, now with what's going on with COVID and the new variant, it's become a more interesting play for sure.
Yeah. No, and it's going to be, it's like COVID's not going away, so it's going to be in play for a while, I bet.
For sure. So, hey, Joe, thanks for being on the show again. Appreciate it. Too bad we didn't get any story about your sous vide turkey and you ordered in and everything. But, you know, we understand, you know, the demands you have because you got to be on awesome calls and not enough time for cooking. But we definitely want to hear about when you do the turkey breast.
I'll let you know.
You know what? My friend, for whatever reason, I didn't get enough food on Thanksgiving, and my friend said, "Oh, I'm going to a potluck now the day after Thanksgiving." And she was reusing the stuff, and she made a really awesome. She didn't like it, but she made like a pot pie out of the turkey stuff. It's pretty awesome. Like even a little bit of cranberry in the middle, a little bit of turkey, a little bit of gravy, a little bit of like a corn thing, and some of the stuffing. It's pretty damn good. And just throw on like a little dough on top. Pretty damn good.
That sounds good.
All right, Joe. Hey, thanks again, and we'll see you again next time. Hey, if you're listening or you're watching on YouTube, hit the subscribe button. We appreciate it, and we'll see you again next time on StockSmart.